Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. As always, if you like the content, please subscribe to our channel so you can get this on a weekly basis. And this week, we're going to cover the 4 major U.S. indexes. We're also going to take a look at what some of the smallest traders are doing in terms of their speculative bets. And we're also going to take a look at the VIX. Well, let's jump right into it here. The S&P 500 has rallied up into that same resistance zone that we saw from back in early June. It's that 3,200 to 3,230 zone has been a stiff resistance here ever since we broke under it back in February. So we've had a nice rally, but we have not pushed up through this. A move up above that would target the gap up at 3,340 zone and then all-time highs, but we have to break above it. Right now, there is, of course, the potential where we see rejection once again up in this zone. That could be viewed as a double top. However, the only way that would ever be confirmed is if we actually broke below this as confirmation. Right now, we're still just range trading at the moment, and we are watching for either that breakout or that move back to the bottom of the range. And those are the 2 major levels on the S&P 500. The Nasdaq continues to be extremely strong. We continue to push higher, made more new all-time highs. But over the last 2 weeks, really, it's kind of trading right around that 10,400 zone, a little up above, a little back below. The major zones of support really, if this were to break, fall back around that 9,700 level. But again, as we continue to say, as long as the NASDAQ continues to push higher and continues to show us that leadership name, the concern for the overall market is much less. Now, the Russell saw a fantastic move yesterday. It was up almost 4%, so way outperformed the indexes and got back up over that key 1450 level. Talk about those 50 levels. 1550 was the resistance from June. 1450 has been a major resistance point since then. And then 1350 right down here is where that support was. So yesterday's move back up over that 1450 was very constructive. Today, subsequently, a little bit of a pullback, but it's held. A move back up would be very good for the overall market. Falls back underneath that 1450 zone, we could look at this as a potential false breakout for a move back to 1350. So it was nice to finally see some rotation down into the most beaten up index of the market so far this year, the mid and the small caps. The Dow very similar to the S&P 500, but again, weaker. We've talked about this a lot. Notice this push higher here did not even test the June high resistance zone, whereas when I pull the chart of the S&P 500 up, you'll see, we have lower highs here. On the S&P 500, you'll see they're flat. So a little bit weaker action there out of the Dow as well. So we're going to continue to monitor, but as long as the Nasdaq keeps making highs, we see money flowing into the mid and the small cap. One of the things I wanted to talk about in today's video is the VIX. One of the things, and I'm going to back this up and we're going to look at it on a weekly time frame. One of the things the market's gotten really used to over the last few years is anytime we ran into some volatility where we have a spike, the VIX fell all the way back down into single digits, right? This was the beginning of 2018, and we had that big spike at the sell-off at the end of the year, and then 2019, that VIX fell all the way back down. Well, on this sell-off, the VIX has not fallen all the way back down. It is basically sitting up around this 25 level, which is a lot higher than the average VIX that we've been looking at over the past few years. While the market has continued to push higher, volatility hasn't collapsed like it usually does, meaning traders are still concerned. There is still worry in the overall market for where things are going in the future. So even if prices have been pushed higher, there is still concern for the overall market, and we have not seen volatility fall back down. So market participants are still expecting larger than normal moves moving forward, and that's just a very interesting thing to note, because if you look at the chart of the S&P 500 and you take a look at the VIX and you pay attention to what's happened over the last few times we've had strong sell-offs, the VIX snaps and falls all the way back down, and that has not happened here. So one of the other things that we're watching for as a sign that the market is probably in good shape to continue to head higher is if the VIX starts to break back down underneath of this and we start heading back down towards this lower support zone in on the VIX. The VIX falls below that March zone right in here, that February zone from that original major push to the upside in terms of the VIX, that would be a very good sign for equities moving forward. So we're going to continue to pay attention to that. We hadn't talked about that much this year, and I thought that was something that we absolutely should touch on here. First thing I want to look at here is the dumb money, smart money confidence indicator. And as the week has gone on, we have seen the dumb money continue to head back up again, approaching where we were from that high back in June before we had that sell-off. So the spread continues to widen, but still, as we've talked about a lot this year, usually when the spread is dumb money's all the way up here, smart money's way down here. So they're still hanging on in terms of optimism there as well. So we have a pretty bizarre reading on this front, but it is good to note that the retail traders' optimism continues to rise here, which of course is a bit of a concern when we're looking at this data set. Now, we've looked at this in the past, and we took a look at the small traders and their call buying versus put buying to open, and we talked about how it was extreme a month or so back. And here we are again, continuing to rise. They've spent twice as much on speculative bets as they were, as we towards that bottom. And historically, we haven't seen anything like this before. So the small traders are really stepping into this market and really taking a lot of speculative positions. Another way of looking at this data set is paying attention to the percentage difference between calls and puts that were opened. And what is happening right now, we're at this 1.5. It means that 50% more bullish contracts are being opened than bearish contracts. So again, people not really hedging and very much loaded on one side of the boat here. And that is out of retail traders, which again are extremely optimistic. Usually that's not a good combination. These things have been a concern, and they've been in play now for a couple of months, and it hasn't really mattered. This is one of those things that can continue for a while, but eventually at some point in time, either the unabashed optimism kind of pulls back a little bit and people get a little bit more in terms of reality, or we see a really sharp move in the opposite direction. So we're going to continue to pay very close attention to this. I mean, the option speculative betting was extremely high in December and January, and it didn't matter in the beginning of January, but then all of a sudden it did. Now, there was an external factor this year with the coronavirus, but if you go back to 2018, when you look at this data as well, I mean, once the option contract, betting really got out of control, market had a swift move in the opposite direction. The big difference, and of course the thing that we continue to touch on, is we have put so much liquidity into the system. How much do these things matter versus what they mattered historically, because we're in a new environment, and that is something we're going to continue to pay attention to and discuss as time moves forward. As always, if you guys have any questions, comments, you want to reach out to me, I'm more than happy to go over anything related to the markets with you. You can reach me at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I hope you guys have yourselves a fantastic week, and I will see you guys next week.